Hi, I'm Ed Parcaut, host of Real Estate Jerky, and we do these lives on, I don't know, Tuesdays and Thursdays or whenever we feel like it, and we talk
Yeah.
about different things. And I have Bobby Atkins here with me, and we're going to talk about time periods, if I remember right. Is that correct?
Correct. Yes. And, the whole reason we're doing this whole series of videos is kind of to be educational. There's a lot of information that people get, and normally they get it all at one time when they get into a contract. So I thought it would be good if we made these videos, people could watch them and kind of have a heads up as to what they're walking into, because otherwise I think it just adds to like the stress of purchasing a home and everything that goes with that, purchasing, moving, and everything.
Yeah, because I mean, the contracts themselves are a little overwhelming if you read the whole thing. And now that there's
Yeah.
so many more pages and so many more pages, but the most important thing is to know what your time periods are when you get into contract. And this has nothing to do with the lending side time periods. This is all the real estate side that you deal with for yourself and and then the real estate contracts. And I want
Correct.
people to understand that. So why don't you go ahead and we're gonna jump right into it. All right.
Sorry. I'm sorry, I pulled the trigger too quickly.
That's all right. It's all new. All right.
That's
So,
fine.
all right. So time periods that we're talking about. So when somebody first gets into contract,
Mhm.
what a lot of people don't understand is real estate contracts are actual contracts. And under contract law, you have to have some type of earnest to make the contract valid.
Correct.
Okay. And so with this and I'll let you explain it, but basically when you write the contract, you guys ask the client for what is it, 1% or a certain dollar amount that they write as an earnest money deposit that gets deposited once the contract gets accepted.
Yeah, typically it's 1%, at least around here. So, on a $360,000 house, $3,600, someone would drop that off. So you have 3 business days from the time of an accepted contract. It happens quite often that contracts are accepted over the weekend. Obviously, that doesn't count towards your business days. I still advise my clients to take it as soon as possible. So if we get a contract accepted on a Saturday or Sunday, please just take it in Monday, and then it makes everyone feel a little bit better. Because once that EMD is dropped off, we keep the ball rolling. But if within 3 days you don't drop it off, then the seller can give you a notice to perform and can cancel the contract. So
Right.
that's the big first step.
All
And
right.
you can do that in personal check, money order, wire, anything like that. I recommend just doing a personal check, dropping it off.
Right, because we talked about the wire issue on the last live that you really want to make sure if you're going to wire stuff to an escrow company, it's the actual information from the escrow company. So the first time I
Right.
would tell you to go ahead and do a cashier's check, or they'll take it's better not to have a personal check, but a cashier's check is better. And then once you get into contract, they can get, later on they get the prelim and everything, then they can actually give you more wire instructions so you can feel more comfortable. That's kind of how I feel. It's just so
Yeah.
weird, that somebody can come in and steal your money through a wire transaction because they tell you there's somebody else. But
Yeah.
you have to be very careful. I had somebody try to use 2 of my cards in the last few days at a
No kidding.
Walmart that I'm like, how the heck did you get my cards? Totally 2 random different, banks, everything else. And
No kidding.
luckily it was grocery store, which I never go to. So they stopped it right away, but it's out there. It's rampant. You just have to be careful.
Absolutely. So there's going on to the next one. So the contingency time periods.
Mhm.
Right now, everything's set by default on the contract at 17 days. So this is an area right now, especially where we see people not only negotiating, but even waiving these contingencies. Right now, we'll just talk about the time periods. Um, so you have your loan, your appraisal, and other inspections, and it all falls under what they generally call the inspection period. But most people think of inspection just as like home and pest.
Right.
Um,
But we're also talking appraisal. We're talking appraisal. We're talking many others. And I'm sorry if I'm interrupting on your stuff
no,
that you were talking.
no, you're good. So a lot of folks, if it's their first time purchasing a home, they may not know that a traditional escrow is 30 days.
Right.
And so as soon as that time clock starts, you really got to get moving, because you don't want to be pushing it and having to extend the escrow period, because that just makes everyone unhappy. And sometimes it can be a reason for people to cancel a contract. So as soon as we get an accepted contract, the first thing I do is the same day as I schedule the pest and the home inspection. We'll get to that later. But obviously from the loan side, maybe you can explain a little bit more on that.
Well, the loan side is basically they want to. You guys deal with a 17-day loan, loan thing. The biggest issue we have, it takes us once we get into contract we have to go to escrow and have escrow give us their numbers. And then that way, when we disclose, it's properly, that's the right numbers that we're disclosing. We have in the past been able to go ahead and just do estimate, right? But people want to know really what they have to bring in. And when we disclose on the loan estimate, we're actually over on those numbers because we can't, up in Northern California, we use the same title and escrow company. Other places don't do that. So when we use the same title and escrow company, they actually give you a discount on title and other services. But government got involved a few years ago and said you can't show that up front on the loan disclosure. You have to show fully indexed fees. And so when you normally get your loan estimate on a purchase, it could be $1,200 to $1,700 over than what it's going to be at the end. I didn't know if you knew.
Yeah. But yeah, which is always good. People are always pleasantly surprised when they see that.
Well, that's the one thing that's nice about the new disclosures that came out a few years ago is they have to go down, not up. Years ago, with just a good faith estimate, people would say, this is what your numbers are. And then you get into the closing table and it'd be completely opposite. And then people would freak out. I'm just so happy the way it is now. So the loan estimate's higher. The CD, which is the closing disclosure, comes out, and that actually brings the numbers down lower. The only time they go up is if you had an insurance policy that you wanted, and then all of a sudden now you have a fair plan fire that is $3,000, and that's not what was looked at in the beginning.
Gotcha. Okay.
Yeah. But actual costs can't go up.
Now, the next one is appraisal.
Okay. Oh, can you go back to the other one? Because I wasn't finished on it.
Oh, sorry.
I was still trying to. So basically, the 17 days is when normally you release a contingency that you're clear to close. That's when you want to release this. That means your loan is done. You're ready to sign docs. It's going to fund. It's going to move over, and you're done with it. The issue is sometimes we go through the process, and you guys go, "Hey, can we release the contingency?" That's not up to me. That's up to your client, and what you guys have to do. Because some people don't get through to the closing, clear to close as fast as we do. And some they take longer, and some online places and other places like that will take probably 20 days, right? Or they'll take all the way to the last minute and then say, oh, sorry, you just don't qualify. So it's very important to use somebody local that your agent knows, that's referred to you. And if it's somebody that's referred to you that's in the, that's not exactly local, that's okay. But as long as they're referred to you and they're really good at what they do. And then I'm done. But basically, we normally hit the 17 days easily. It used to be 19 days. And I always tell people we can reduce that down to 12 days if you need to. The only issue we ever run into is the appraisals. And like right now with the snow up in Tuolumne County, good luck getting an appraisal done in the next 30 days.
Yeah, but which takes us to appraisals. And for anyone who is a first-time home buyer, obviously the bank wants to have an appraisal done to make sure that
Stop saying that word. The B word. Oh, basically it's lending, the lending people, the mortgage back, the people who Fannie and Freddie Mac, those are the people, not a bank, not somebody else. They are requiring, VA, FHA, USDA, all the entities that actually gives the money to us to lend. They want to have an appraisal done to verify the actual value of the house that you're buying. It's on you to pay for the appraisal because it's your loan. If you're paying cash, you wouldn't have to have an appraisal. I recommend doing it even if you're paying cash, just to make sure you're not overpaying for the place. But that's the issue. And so when you said the B word, technically you're correct, but it's really not. It's Fannie and Freddie. That's why Fannie and Freddie, sometimes with 20% down, we don't need an appraisal anymore. We can just get away with it and not need it. It's called a PIW, which is a property inspection waiver that has to do with appraisals. We get them probably 95% of the time on 20% down or more.
Yeah.
Yeah. The only time it could come up where it doesn't is if you have a client who has, it's weird. It looks at income, looks at credit score, and it looks at the value of the property for that PIW.
And you said about 90% of the time?
Yeah, more than 90% of the time. I've had it where people were putting down 20% and they got it. And then they have some ridiculous, their DTI changed, right? The debt to income ratio changed because there was something they didn't tell us about. Like they had just bought an RV and then now they don't get the waiver. They actually have to have an appraisal. which is not that big of a deal. It's just, but if you have a PIW, we can close that purchase in 8, max 9 days.
No kidding.
Yeah, because
fantastic.
The reason we can't do it any faster than that is when you sign the loan estimate, that's that document I was talking about that breaks down the fees. You can't sign loan documents until after 7 days from when the date you sign that loan estimate. So that's the 8th day you can sign loan documents. Well, we can fund the moment you sign in the morning, but in Stanislaus County, they can't fund the same day unless it's on a Friday or before a holiday. So, if that's a Wednesday, then they're going to record you on Thursday.
Yeah.
Sorry, I was getting a little stuffy there. All right. Yeah. So that's appraisal, everything about it. If you have any other questions, you can direct message me.
Then don't say the bank. It's a Fannie and Freddie.
Yeah. Well, I mean, it used to be back when, It's a Wonderful Life, that movie was on. That's who everybody went to. There wasn't the Fannie Freddie. FHA started after the Great Depression. That's because back then you'd have to pay cash for the place or a 5-year loan or whatever, but they were much cheaper. $5,000 for a house or, a couple thousand. But back then, that's the only people. Now institutions came out and the government got involved. Fannie and Freddie used to be a separate entity. Then during 2006, they were absorbed by the government and now, put in receivership and they own them. And they're really not government entities, but they were taken over by the government because they're about ready to fail.
So the gist of it is, for people who don't know the industry, the person that's loaning you the money or the entity wants to make sure that the house is of value.
There you go. Yeah. There you go. Yeah.
There we go. Okay. Yeah. I should have summarized it like that.
That's okay. You're just, it's one of those things. It's like, I'm old enough to know when someone says, go make a copy. They used to say, go Xerox this. Right. Yeah. And that wasn't really, there was Canon, there was other copiers, but it was such a generic term. And that's basically what you were doing. It's just a generic term, which really, they're not the ones they're just one of the people who have access to lending.
Yeah. What's the kind of an older term now that I get, but a lot of younger people don't, is fax. But anyway,
we're fax, ma'am.
Yeah.
What was that from?
Fax Man?
Just the fax, ma'am.
Oh.
Die Hard 2.
Oh, okay.
It's a Christmas movie, man. Christmas weekend was last weekend. So, yeah, Die Hard 2, he asked for a fax because he faxes over these fingerprints of somebody that died in the airport. And then she's like, anything else? He goes, just the fax, ma'am.
Oh. Sorry, that one went right over the top.
Yeah, well, you had to watch Die Hard 2.
I didn't have any.
I remember all those stupid movie quotes. Yeah, don't get me started on Joe Dirt. All right. So other inspection periods, I'm going to throw this out there and then I'll let you explain it. We're talking about pest, home, roof, chimney, pool, septic, anything else still falls under the 17 days. And what's going on with those? Anything else we need to know?
Not too much. Most folks are obviously you're going to have a pest, right? I always recommend people have a home inspection. A lot of times people want to forego that because it is something you pay out of pocket, which are a lot of the inspections are. Obviously you pay the pest, the home, the roof. That's a separate one. There's different negotiations if you find issues with the roof where you can ask for like a 2-year roof cert from the seller, and that could probably be a whole nother show. Chimney is interesting. If it's a 2-story, they're going to charge you more than if it's single story. Normally it's $100, for a normal one, and they charge you $150 for a 2-story. Pool, it's not very often we have a pool inspection done, but I do recommend them because obviously the services, as far as like the pump and the filter, everything like that, if they're verified to be in good working order at the time of purchase and something goes wrong with it, home warranty won't have as much of a fight trying to repair it. And then septic, a lot of times, if people don't disclose it, initially, you find out it's out in the county. And so you say, okay, this is on a septic. I've had one where we did an inspection and there was $12,000 in repairs that we had to negotiate before closing. So,
and sometimes what happens is the property used to be on septic and now can be connected, or is on septic now, but can be connected to the sewer. Mm-hmm. Sometimes the city will make you connect before you can do the transaction too. Sometimes in some of those areas. And I've had it in over where I live, Modesto, college area, a little bit outside, where people bought a house and then they were like, what's this hole? And then it was an old septic, still the tank was
Yeah.
still there. They didn't fill it in with dirt or fill it in with concrete or take it out. They just left it there. That's somebody can fall in that thing and die and never get out of there. So be careful with those things. So.
Yeah. And I can say over in the La Loma area, a lot of those houses were originally built with septic systems and then later connected to the city.
Right.
But yeah, that's something I know at my first house, I found this little lamp light hole and put a hose down there and ran it for like 20 minutes and, the water never came out. So I'm sure that one wasn't backfilled either.
Well, you could have just been filling up mud anyway. So who knows?
Maybe.
Yeah. All right. So this is important. I mean, these pests, sometimes the actual seller of the property will do the pest. They'll do they'll do all these inspections to make it a clean sell. I know a lot of agents who will have their sellers do all this so they know exactly what they're getting into. So when they set the price, they say, we know that there's none of these issues. We've had them done, and this is the price. Instead of someone coming back afterwards and, because sometimes some pest companies, and I'm not saying all, some can come up with some stuff that were like, really? And then their prices are 3 to 4 times higher than what it actually costs. I'm not saying all of them are that way.
Yeah.
I'm just saying in general could happen, and you could get it done a lot less less expensive getting the stuff done with somebody else. But if you have the seller address these things ahead of time, clean clothes, clean everything. And we don't want to know about pest issues. If there are or any of these issues that you're going to ask for closing costs from the seller instead of having them repaired, we don't want to know that. We just want to know how much you're getting, and we don't care why you're getting it.
Mm-hmm.
Right. And because I've had some people do an addendum. We get addendum 2, right? And we go, hey, we need addendum 1 now that this, and on there says, we're requesting $20,000 for pest work, this, and they break it all out. Right. And now that's something we don't really need to know. So if you do that on an actual request for repairs, and then if you do an addendum asking for that money, just ask for that money as closing costs. We don't want to know why. Otherwise, then we have to address it. And that's not doing anything illegal. It's not for us to get involved with as a lender. We don't care. The only time other than that is the VA. VA wants to have a clean pest. But if there's issues, you can do a short form that says there's no active pests. And you have to find an actual inspection company that'll do that short form. A lot in California will say, we're in California, we have to do this. Well, VA only wants a short form.
Yeah.
So.
And now to go back to what you're talking about. So for somebody, say they have like a rental property or a property they inherited and they have the time and they want to put up the money to do the pest and home, that really is ideal, because then you know that you're going to have no problems with that transaction. Nothing's going to delay it, because it happens quite a bit. But unfortunately, most people, they're selling their house kind of last minute thing. They found a house they want to buy, but they have to have theirs listed and in contract first. And so oftentimes we don't have a chance to do that, but that is the ideal way to do it.
Well, that also will go much faster. You can say, I know my price is right. I've dealt with all my issues. There are no issues. There's not even a leaking faucet or a running toilet. None of that stuff is there. There's no, they've went through and checked everything. The cleaner you meet the house, the more money you can get for that house, right? If there's no issues, they'll have no problem paying you. But if you need, and we talked about this before, if you have a roof on your house that is a 25-year roof and you're 27 years into it, you might want to replace that roof before you get into, you go to sell it. Otherwise, someone's going to say, okay, well, it's going to cost me 10 grand. Well, in this market, it could be, a normal roof that used to cost 6 to 7 could cost us 14, depending on how much, to get the supplies. Things that you don't know. You take off the roof as a buyer, and then all of a sudden you have to replace all the plywood. Well, plywood's not cheap these days. So it's so much better if the seller deals with it than having the buyer deal with it. But again, that's just my side. That's all.
And it also ensures that you don't have a reason for someone to back out of the contract, and put that thing back on the market.
Yeah, because there's nothing worse than going back on the market because you don't get top dollar usually.
Well, and people always ask, what's wrong with it?
Yeah, why is it no longer on? Right. Yeah. it's like why didn't that relationship work out with that person? They ask those questions.
Yeah, tell me
very controlling. All right, so what's next? Time frame negotiations.
I can say,
so what you're saying is you can negotiate the time periods?
Yeah. So there's negotiations, and there's also ways where you can shorten your own time periods when you're trying to write a competitive offer. And
Right.
that kind of tied us in there. So that's why I'd bring that up. So example right now, had a cash buyer, wanted to write a really clean offer, waived all contingencies up front, and did a 15-day escrow. And so you can't get a much better offer than that. And so we submitted that and got it accepted. And that's one of those things that can be negotiated. Now, you could also say, okay,
Let's talk for the buyer side in a second here. Okay.
Sorry?
Keep talking, but afterwards I want to talk about the buyer side.
Oh, okay. I was gonna say, well, so this was the buyer's
Right. I understand, but
transaction.
that's not okay. So that was 1 in 4 deals right now is cash. So
Mhm.
most of the people are going to be watching this are not going to be paying cash for these properties. And
Sure.
with the new regulation that's going through, a lot less deals are going to be cash going forward. So as a buyer that is doing a loan, what is the best way they could write a clean offer if they can't do all cash, waive all contingencies, and a 15-day? Now I'm not saying they can't do a 15-day. If they're doing 20% down, I can check this ahead of time, which a lot of people don't know, to see if we can get a property inspection waiver with the property they're writing the offer on. Then they can waive the appraisal, right, as a buyer, but not FHA, VA, or USDA. That's only Fannie and Freddie conventional.
Yeah. So, if you're securing a loan and if you have a 20%, even then I would still, I think a competitive offer would be a 20, 25-day escrow, something that's a little bit quicker than the others. Depends on the circumstances of the sellers. A lot of times people have replacement properties, so they want to close quicker than.
Well, if we can check to see if we can get a waiver up front, right? And if we can, then you can do a 15-day close on a purchase with us. And I'm not saying that we're so great. We just know how to do it. And there are a few other people out there like me that know how to do that. So it's not something new, but a lot of people don't think about it. They don't think about checking to see if they can get a waiver up front on that property before they do it. So we do DU, LP, we check everything up front because we want to make sure when our client is approved, they're approved through all those things and underwriting, and there's no issue. And we know they're not going to fall out. So they can waive the appraisal. They can waive certain things that they want to do if we can get rid of that. And you can actually waive the loan contingency if you wanted to. But one of the things that you do, and you can explain this, is when you waive the contingency, you're actually waiving your right to get your deposit back, correct?
Yes. And that I'll go and bring that up. So that is one thing that a lot of people have questions on, and I try and address it right from the get-go. I say, okay, so this earnest money deposit you put down, once we waive all the contingencies, you kiss that deposit bye-bye if we back out, and it's really rare when people back out, but sometimes it happens. And if it's for what we call a non-contractual reason, then obviously you're going to forfeit that deposit. And I know we're going to do a show, I think next week on reasons you might back out of a contract. But I explain to people as we release each contingency, so we release the loan contingency and the appraisal contingency, right? We're saying, okay, we know that this loan is good to fund. We know that the appraisal came back at value. And when we release the inspection contingency, or we waive all of them at the same time, we're saying we're completely satisfied with the whole investigation period, and we're ready to go forward and just go ahead and close. So if people back out at that time, the deposit's gone.
Correct. But that's why, and so you have to be okay with that. I had a gentleman who was buying a $1.5 million house, and the earnest money deposit was $150,000, and they released every contingency.
Really, right up front, huh?
Yeah.
He
had to. This was San Joaquin, which is close enough to being, you might as well just say the Bay Area. They do things a little differently than we do in Stanislaus County, Tuolumne County, Calaveras County, just differently. But we're getting there. We're going to be there. So
yeah. I know the Bay Area is a whole other beast.
Yeah, because it's everywhere. It's so competitive, and right now there's still limited inventory. I looked at the numbers for some of the areas around here, and it's like compared to last year, we're so negative down on listings and properties closing, and that's because there are not enough listings. So if you're thinking about selling your house, call Bobby.
You could have plenty of people writing offers on it. That's for sure.
Yeah. All right. So contingency removals. One last thing we want to say is basically when you do that, you are risking losing what you put down as your earnest money deposit. So if you're buying a
Correct.
$350,000 house and it's 1%, that's $3,500 you are risking by doing that. But sometimes you have to do that. So it's very important that you're working with a lender that knows what they're doing so that they can tell you, hey, by the way, yes, this is fine. I will tell you, hey, yes, you're good. And if for some reason it's on me, I will pay your earnest money deposit.
I didn't know that. I've known you quite a while too.
Yeah, well, I don't normally, you haven't came to me and said, can we waive these with this, this, and this? And then
Yeah.
I'll say, I guarantee that their earnest money deposit. So,
Yeah.
So that's
Good
how,
to know.
that's how I know for a fact how good we can get it done.
Yeah.
Right. We know that. So, and that's what you want somebody to do that. Nobody that you make a phone call to and you can't walk in their office will do that.
Yeah. Yeah. That's not going to be Rocket Mortgage or Quicken Loan.
Hey,
right?
you don't say those words. Don't say those.
No. The only
No.
people I ever recommend are people that you've worked with in the past. And like you said, local lenders.
Yeah. Anyway. All right. So we hit everything today. So one of my takeaways from today, I want people to know is when you're ready to do something, you need, and someone asked me the other day, when is the best time to buy? The moment you're thinking about buying is the best time to buy. Right. So right now, everybody's thinking, I'm going to be doing my taxes in January. We talked about this before. How much money am I getting back that I can use towards my down payment? We're not looking at down payment assistance programs right now because there's just too many offers out there and sellers don't want to take them. They don't want to have their property on the market for that many, however long it's going to take to get that done. They'd rather have somebody else buy it, which is real easy. So you need the down payment. And we talked about negotiating the purchase price first. And then if you need closing costs, coming back and raising it afterwards. So it's not part of the game. So there are some things that we can do. And now one other thing we can do is if I'm quoting you a 3% interest rate, we can look at raising the actual interest rate up to actually offset some of those closing costs. Because the higher the rate is, we get these things called rebate, which goes to the buyer, the borrower, to actually pay for closing costs. So there's stuff we can do. We just need to know. But if you have a 620 FICO score, it's going to be really hard to do that, or a 6 or a 580. And I've seen some stuff where people are posting on, even VA and FHA, there's no low FICO score. There isn't a FICO score requirement. Yes. But when you do that under 620, it's like hitting your head against the wall. It's going to be painful, where we can take some time and get you above that. So it's an easier transaction. It's so much nicer. You want to do it again. 580 transactions. It's like they cross their T's and dot the I's so much more because you're like 20 times more likely to go in foreclosure at that FICO score. That's huge. So that's why it's important I don't care. Yes, we can do those things, but we don't want to, and you don't want to. So let's work on that, getting it up. Let's take another 30 days to get that up.
Yeah.
All right.
And I was going to say, you think you could get it done in 30 days or
it depends. It depends. Yeah. If it's just paying a couple things down, then you give us statements and we do a rapid rescore and we get it up. If it's where we got to add on your rental history, that could take 45 days. Right. Because that takes time for the bureau to get it up and do all that. So it depends. Sometimes it's real easy. Sometimes it's more involved and it could take 3 months, but still that is, 3 months from now, yes, the rate might be a little bit higher, but you're going to have a higher FICO score. So it's really going to be much better.
Well, I guess that would really be another advantage of going with you, is because that's another service added, right? Where people normally talk to credit repair places, and like you said before,
stay away from them.
You can help them and point them in the right direction.
Yeah. Most, 9, I'm not saying they're all bad, but a lot of them, 9 out of 10 don't do what they say.
Yeah.
You might get lucky and get with that one that actually does something. But if you have issues with your credit, just give me a call. I can walk you through it. We can put you on a plan. I've had it where I've had people on a plan for a year, right, before they could buy. So it's about focusing, moving forward, because that year goes by so fast. I mean, look at this year.
Yeah. I know, it's almost gone.
Yeah. So, so just, that's what I kind of wanted to call to action today was, if you're thinking about this, give us a call. Let me run the numbers. Let me see what you can qualify for and move on and, go from there. And then, what can you do? What should you do? Maybe I tell you to go get a better job. There's a lot of jobs out there that you can get right now because a lot of people aren't working. You could get a better job.
So. Yeah. It's crazy what some of the wages are right now.
Yeah.
some of the incentives.
Yeah. So, and I mean, even like, and I'm not saying go work at In-N-Out, but In-N-Out. And I saw one yesterday at some other place that was a food place for $20 an hour to start. And that's amazing. Don't tell my staff. I'm just kidding. Yeah, but that's a hard work. Fast food is hard work. But anyway,
it is.
And thanks everybody for watching this today. Sorry, my noise in my ear. Probably didn't hear it, but thanks for watching this today. We really appreciate you liking these. If you like what we do here, just follow us. Let us know. If you watch us after the fact, if you could just hashtag replay that we know you're actually doing that. Anything you want to add, Bobby, before we go?
No, that's it. I think that wraps it up.
All right. Well, thanks you all. And thanks, Bobby, for being